Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Wednesday, January 21st, and my name is Raleigh White, and I'm coming to you live from a cloudy, overcast, chilly day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a special focus on day trading. So he's going to start today's session by giving us a midday market analysis and what stocks are on his watch list here at the midday. Then he's going to pivot and he's going to talk about the difference between day trading stocks and indexes. He's going to talk about why stocks are considered trending assets and indexes are considered counter trending assets. He's going to talk about also why intraday levels are most important, or which intraday levels are most important for the indexes, and why using levels, these levels and market internals can be used to your advantage. And finally, he's going to share how market internals and the Alpha Zone Pro yield the kind of trade alerts that he issues 1 to 3 times every day. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember now, I've opened the chat room to everyone, so we do have some ground rules. Always be kind and supportive in your posts. Please keep to the topic. No political discussions allowed whatsoever. And also, please keep your side conversations to a minimum so the rest of us can focus on the education and the information that Roger is sharing, because he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. So if you were with us this morning at 8 o'clock Eastern Time for Roger's pre-market briefing, you'll note that there were several catalysts that we discussed that are important today. On the finance front, we had 6 companies, these are S&P 500 companies, all scheduled to release their earnings before market opened. On the industrial and the transportation front, we had FCX up 1%, TDY also giving their earnings before market open. And then on the transportation side, we have United Airlines coming into the open plus 3%. On the consumer front, we had Netflix up 1% and KHC down 5%. In the healthcare sector, we had Johnson & Johnson scheduled to release their quarterly earnings before the market opened. And then on the energy and the technology front, we had Halliburton getting ready to issue their earnings before market opened, and TEL giving their earnings before market open. And then on the Fed front, gosh, we have Trump at Davos. A lot of focus on what he has to say with regard to England, NATO, etc., because those comments have definitely been having an impact on the markets. We also have pending home sales coming out and 20-year bonds. Now, a lot of people ask the question, so Raleigh, what's the importance of these catalysts? Why should we pay attention to them? Well, from Roger's perspective, he believes that information that is either known or will be known during today's trading session but is not yet priced into the market, these are volatility flashpoints, and we need to be aware of them, especially if we're considering, doing any trades on stocks, for example, in the finance sector, industrials, transportation, consumer, healthcare, energy, etc. It's important to be aware of these catalysts. Now, as far as Roger's pre-market stock watch list is concerned, folks, these are large cap stocks that he has his eyes on. And today he shared with us 10 shorts and 13 long stocks. Now, what you need to know here, folks, is that these are not automatic tickers to be traded. They're on his watch list for a reason. It's because they are setting up and have the potential to be stocks that he wants to trade. On the short side, his big caveat was, look, guys, make sure that you're looking at stocks that are already moving lower. Not that they've just begun moving lower, but they have already have a track record of moving lower. And that's very important against the backdrop of today's markets. And once again, on the long side, the same thing. Make sure that you're picking stocks that have already basically receded, have consolidated, and are moving higher. And those are the selections there. Now, Roger goes through a three-step process when he looks at stocks to trade during the day. There's the pre-market stocks, and you're looking at the watch list right here. And then he's going to give us his midday update, which he'll do shortly when he joins us. And those are stocks that are looking good here at the midday. And then he takes a final look at the watch list about 3 o'clock in the afternoon Eastern time to see if there's anything that he may want to swing trade, going into the overnights. So once again, folks, just be aware that these are watch list stocks, and each one of those has a story to tell, and Roger's going to give us an update on those very shortly. Now, as far as his pre-market thoughts are concerned, we noticed that the futures markets were open, mildly lower into the open, especially as contrasted to the big sell-off that we saw yesterday. He also reported that the put-call ratio was back in balance, but that the VIX remained up right above that 20 level, which is the point at which we start to get a little bit concerned. We certainly don't want it to move up much higher than where it is right now, but the VIX is above 20. He also pointed out that stocks above the 20-day moving average were definitely slowing, and those stocks below the 20-day moving average were accelerating. So that's an indication that momentum is basically turning there. Sector rotation definitely shifting and favoring defensive stocks. As a matter of fact, they occupied, I think, positions 1 through 6, with most of the speculative, interest-sensitive stocks being at the bottom of the sector list. So once again, we have a defensive stocks, and these are things, once again, that are not bellwether signals, for example, for the market turning around. We also noted that the bonds were lower. They were sitting very, very low in their range at a key support level, and they basically were pulling the SPY, the QQQ, and the MAGs lower as well, but they were hanging at support. So Roger doesn't expect those stocks to basically move much below support. And based on what we saw yesterday, he shared a very interesting statistic. He said, typically when you see a big move lower, like we saw yesterday in the markets, on the next day, 80% of the time, the markets will open lower, and 20% of the times they will close lower. So he said, guys, pay attention to this, because for those reasons, I expect that we are going to potentially open lower, but I expect there to be some recovery, and particularly into the afternoon, expect to see a reversal. So from a trading perspective, he basically says, be patient, okay? Don't jump on things, resist fear of missing out. We have to be aware that the markets are very, very sensitive to what President Trump is saying in Davos. And so there could be a spike at any time. So kind of let the dust settle from that. Let the morning go by and see what comes in the afternoon. And that was basically, I think, his sage recommendations coming into the day. Well, we have a terrific group of people here with us today, as we do every time we have the VIP trade room, and Roger has put together a nice agenda. His focus today is going to be on day trading. He's going to start with his midday market analysis and, those stocks that are now on his watch list as compared to what he did pre-market. He's then going to share the difference between day trading stocks and day trading indexes, and why stocks are considered trending assets and indexes are considered counter-trending indexes. He's also going to talk about which intraday levels are most important when you're looking at day trading the indexes, and how using those levels and market internals can definitely be to your advantage. And finally, he's going to talk about how the market internals and the Alpha Zone Pro help drive and yield the trade alerts that he issues. So a terrific agenda. And if you've got questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with his presentation. And also remember this, folks, I have opened the chat room to everyone. And because of that, we do have some ground rules. Number one, if you post, please be kind and supportive. Number two, keep to the topic. Number 3, no political discussions allowed whatsoever. Number 4, please keep your side conversations to a bare minimum so that the rest of us that aren't involved in these conversations can focus on the education, the information that Roger's sharing, because after all, guys, he's here with us today to give us an edge in the market and to help us become much more confident and consistent in our trading activities. And with that, folks, let's say hi to Matt. Matt, great to see you, buddy. How you doing?
Hey, good. How are you?
I'm doing super. And I know Roger's here with us. I know you folks are in Florida. Are you experiencing some of this chilly weather that appears to be dipping southward?
Well, to be honest with you, we are kind of this is the end of it. We got it for the last 2 days.
Oh,
This is
okay.
we're about 10 degrees warmer today. So we were in the 30s yesterday, high 30s. Now we're in the high 40s, low 50s. Now we're coming up on the other end of it. So the weekend was really, really nasty, and yesterday was, I think, the coldest day. So we got it pretty bad. We did get
Yep.
it pretty bad, but
Yep.
I guess you guys are now feeling what I was. This is what I was trying to tell you on Sunday, that I'm freezing my tuchus off here. This is crazy, you know. I mean, I'm cold. I'm
Nobody
cold.
likes a cold tuchus. That's all I can tell
Nobody
you.
likes a cold tuchus. Nobody likes a cold. Um,
But I tell you what, Roger, I was looking at the extended forecast, and in Austin, like on Saturday, the high is 32 and the low is going to be 18. And we have an
oh,
80% chance of rain. We have
oh,
a mess coming.
yeah.
We
You do
have
have
a
a
mess. Anyway, it's cold everywhere. I think that's what it is. And
yeah
I
a
don't know
lot of
why I'm
flights.
moaning about it, but
Yeah, a lot of flights. My wife she's a social butterfly, and she has a lot of friends who are traveling right now, and she says that there's a lot of delays right now from New York and so forth and so forth.
oh,
So
I can
yeah,
understand. It's
yeah, there's
that
a
time of the year. But
it's that
anyway,
time of the year.
Here we are. We're all together here in the VIP trade room. We've got a great audience here, Roger. I love the agenda that you put together today. And this is against the backdrop of all the, the shenanigans that are going on in Davos and whatnot. And I was thinking about catalysts today, and it was just kind of like, I think the biggest catalyst today has been Trump.
It
Because
is.
the
It
markets just
is.
seem to be hanging out. What's he going to say? What's he going to say next? And I watched a little bit of his presentation from Davos, and I can understand why people are nervous. I mean, he's kind of all over the place. But
Uh,
anyway,
I didn't watch any of it, and I'm not going to watch any of it. Every time I tune in, anything political, and I don't care where you are, what side you're on, anything I tune in, I just get pissed off. So I try to get it all just from, like, indirectly from my financial news and from you guys. I try not to. I don't even watch it anymore. I don't like it. I don't like politics. I never did, and I still
yeah,
don't. And I like to get all my data from. I think the financial markets are a much better indication of what's really happening than talk. Talk to me is cheap. That's kind of. Mm.
yeah,
I gave a lesson just now. The reason I was a minute or two late is I was actually giving a lesson to the folks in the pit. But I want to extend this to all of you because this is really important and this is a great example. Okay.
okay,
So I want to show you guys. This will only take a minute, but I want you guys to see something. Okay. I'm going to show you two stocks. This is ADI. Okay. And this is Google. Okay. Now, both stocks are at the VWAP right now, right?
okay, yep,
This stock is at the VWAP and ADI is at the VWAP, okay? And let's say that our signal was, let's say we're mechanical traders, and we want to pick one of those two stocks because they're both at the VWAP, right? And we buy at the VWAP. This is all hypothetical. I'm not taking.
exactly. And they're both in the same sector. They're highly correlated. Yep.
Yeah, they're yeah, and ADI and Google, they're both. So my question to you is, and let's just assume that the daily chart, which is right here, looks the same on both of them, and it happens to be the truth right now. So now, why would you pick? Which one would you pick? And if you're in the pit, please don't answer. Don't ruin it for everybody else. But why would you pick one stock over the other? Why would you pick Google or ADI? Now, they're both doing very, very similar things, which is why I picked them for your example. So here's Google and here's ADI. Okay. Let's just take volume out of the equation. Let's take
Okay.
volume out of the equation completely. Let's say they have identical volume. And if you're in the pit, please save the answer. I understand you understand it already. So let me explain. So anybody, how many of you would take Google versus ADI? We may see some snow, possibly even in Houston. Oh my goodness, off of DS, snow in Houston. North of Dallas, we supposed to get snow. You got a lot of people on YouTube, Raleigh, from Texas.
From Texas. Yeah, we all know
Yeah,
what's coming. We all know
yeah,
what's coming. But
yeah,
the
yeah.
question is this, Google or ADI and why?
Yes, yes. It doesn't matter if it's a swing or a day trade. Which one? There, I gave you two stocks that are almost identical. So it's, why? The question you haven't given me the answer. Do you guys know why? Why? Okay, I'll tell you why. How we get here is equally as important as the fact that we got to the VWAP, okay? How we get there is equally as important. Look at the slope here. Look at the slope here.
Hmm.
Look at the slope here. So look at the slope. Which one is steeper?
Obviously, definitely Google.
Definitely Google. No comparison. ADI is a better stock if everything is considered equal. So I gave you two stocks that look exactly the same on a daily chart. Just forget about volume. Just assume it's a swing trade. Just forget about volume for a minute. Look at the slope here and look at the slope here. The slope, how we get somewhere. You can't just go and say, "Oh, it's on my scanner. I put every stock that made a swing high and is now on my scanner. It's automatic trade." No, no. The slope, the slope. Look at the slope of the SPY coming down, right? That's the slope of the SPY. Okay? Google, Google is just as slopey. It's holding off for now, but it's just as slopey. Actually, it's not holding off. It's making you lower lows here right now. ADI, not as slopey. Now it may change. And again, we don't know which one is going to be the winner. I'm saying statistically, over 100 trade examples, the one that does this is much more likely to go back up than the one that fell at this slope. Okay. So, folks, how you get somewhere, how you get somewhere, how you get somewhere. Here's the 200-day FMED. Here's the 200-day moving average. Please adjust your charts. Here's the 200. ADI is not below the 200-day moving average. ADI is a 303. The 200 moving average is
It's above the
238.
flag. Yep.
I specifically wanted to give you two stock charts where everything else looked completely equally. And both of them are on my watch list, by the way. And both of them I set alert to. But I wanted to show you an example of, because I always say it, how we get somewhere is just as important as where we are. Well, we're on the VWAP on both of them, okay? Or at least we were a minute ago. But you see the slope? This is telling us that it's resisting going down at a much better rate than Google. If you can't notice things like that, if you're not paying attention or noticing things like that, don't worry, because about 5% of us are. And we take all of your money from you every time. Just FYI. So you should learn that. You should learn that. Okay. Just as important. So if you have two stocks that look equally as pretty going up, look and see how they weight on the way down. On the way down. What I just gave you is something that took me about 15 years to figure out by staring at charts. Save yourself time,
Mhm.
please. Okay? All right. And we just now broke the low of the day. And by the way, how many trades have I done in the pit today? Zero.
Zero.
Zero. And by the way, what am I saying here? Let's see. Let's see how many times I said the word patience. Hold on. Okay, hold on.
How
12
many times
o'clock,
you use the word patience? Yeah.
12 o'clock, more patience, 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 twice today, patience, 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 patient, patience. You guys understand? If you can't understand subtleties like that, then you're not reading charts. You're just looking at charts. Okay. And what I just said was very important, and I hope you remember it. Okay. So, as far as expectations, Raleigh, you always ask me that question.
I did. Yeah, exactly. Are any surprises from what you expected going? Because I remember one thing that you had us all write down religiously. You said after a big move like we had yesterday, 80% of the time the market's going to open lower and 20% of the time it's going to close lower. That old
Yes,
80-20 rule. So we're all
exactly.
braced for that. So any
Exactly.
surprises on that front?
Yeah. So far, the market's not doing anything extra. What did I tell you guys yesterday? I said everybody's expecting things to go up a lot or down a lot. I'm expecting choppiness. I'm expecting us to consolidate near the 50-day moving average. Do you
Mhm.
guys remember me saying that yesterday? It was 24 hours ago on this show that I said that to you. I expect us to consolidate near the 50-day moving average. Not expecting. I'll tell you what I'm a little surprised about. I'm surprised that we showed so much directional bias early in the day, but this is just telling me that we're volatile, you know? Thanks, Omar. Thanks, Omar. I hit you up on Telegram as well, by the way. Um, so real important. Real important, okay? Real important. So again, um, pay attention to this. Pay attention to this. Pay attention. We just may consolidate here, which means not going anywhere. I actually think we're going to consolidate here for the foreseeable future, and I think the market's waiting for that Supreme Court decision really badly right now. Okay, and
And as I understand it, that's eminent. Is that correct,
I
Roger?
don't
Or is
know,
it, you know?
Raleigh. I don't know. I honestly, a lot of people think here that I'm in the know. I know as much as I read on bar charts, as I hear from Matt. And that's I don't look at the news. I don't look at reports. I look at price action. So, and I hear what you guys pretty much say. That's my exposure. And then at night when I'm scrolling the news, I'll look at the headlines, like on my little iPhone. That's about it. I don't spend much time. I'm spending all my time with charts. And it works really well for me. So I don't really feel like I need to do anything. By the way, I gave you this level this morning. These are my levels from this morning. We're going to talk about levels today. Look at the level that we hit.
Yeah,
Yeah.
like almost to the tick. Yep.
Yep. Yep. And look at the low and look at how we stay near these price levels
Hmm.
multiple times, multiple times. So, anyways, yeah, I
Yeah,
have no
I
idea.
just did a Google on it, and Bloomberg said, at this point in time, probably sometime in February. So it's anybody's guess. There's
Yeah,
obvious.
I did read something. I did read something yesterday, Raleigh. I should have you just refreshed my memory. I did read on one of the posts that I subscribe to. I did read yesterday that if they don't come out with a decision yesterday, this was before yesterday's decision, that if
Right.
they don't come out with a decision yesterday, that the next possible opportunity will be sometimes in February.
Mhm.
I did read that. I did read that. You just reminded me of that. But again,
Yep.
anyways, here we are. Okay. All right. So let's talk about the market, overall market. This is the SPY right here. You could see on the daily, we're just kind of hovering. I think we made the high in the day, high and the low on the day. I think we're just going to gyrate around here. I still think we're going to stay near the 50-day moving average for quite some time. These levels we're still respecting because we have a choppy wide range day. Um, and I want to talk about these levels today. I want to talk about these levels, and we're going to talk about these levels as soon as I give you my stocks on the day. Let me just take a quick look at something here. Broke down. Well, you know what? We can look at all these together. So let me give you these. Let me give you these stocks. We're looking at the daily right now, and we'll kind of take a peek at the intraday. So let's look at the shorts first, okay? Because I do have a
Okay.
lot to teach you today. Oracle, that's breaking down. Nice breakdown. Market going up, down, not impacting the stock at all. Very nice short. Hims, very nice short. By the way, D stocks have been on my short list now for Hims has been on my short list now for about 2, 3 weeks now. Hims, Roblox. This is a very nice A line to the downside, Matt. Do you see it? Now you guys should have recognized that almost instantly.
Mhm.
That's an A line to the downside right there. Okay. Reddit. Reddit below the 50. Not really anything holding it up till right here. Nice downside move. Volume picking up during the day. Not bad. Not bad. LYV. Live Nation. Very nice breakdown here. You got a little bit of support here, but you still got a while to go. Nice short here. Shopify. You got the 200 days, so you got a target right here about 4 points from now, which I think we're going to hit. That's a nice short. It's a nice short. Sprouts Farmers Market. I wouldn't day trade this, but that looks like a pretty good swing. TME. Too much entertainment, I call them. The stock price history is very attractive. It doesn't have a lot of back and forth, and it's breaking down. Volume is not so great. Nice looking stock, though. Docs. Nice looking stock. Volume is picking up on it. Also, very good price action. Very nice price action. Pretty good for yeah, I don't know. All right. Nice price action. Nice price action. AIG. Nice breakdown. Look at that. Just consistently going down. Can't make big mistakes going short any of these stocks. They're all in the crapper. Look at that. Talk about being in the crapper, huh? No day trades here. Most of these are swing trades. The volume is And TRI. Reuters going down is not a good thing for the markets, by the way. But look at this trend. That is a very, 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 very nice trend.
Yeah.
Make a nice, let me make a little star by that. Got to be honest with you, I like a lot of these stocks that I just showed you. Okay,
We're
let's
getting ready. We're
continue.
getting ready for the Winter Olympics with these slopes, Roger. We're going
Yeah.
to have to come up with some Winter Olympic analogies.
That's right. All right, let's look at longs, okay? LSCC. Okay, nice long for a swing, not for a day trade. On semiconductors. Nice stock for a swing, not day trading. I wouldn't be day trading this stock. That's a nice stock for maybe a day trade. Staying above the VWAP. It's I'm it's defending the VWAP actually very well. Let me make a little note by it. Nice look. Nice look. Yeah, they're shitty. Shitty. Okay, let's continue. Google. Again, my problem is the slopiness. Is the slopiness here. I don't like this is way too steep. Way, way, way too steep. Let's see how ADI. Yeah, those are the cowbells. That means SPY is now starting to come off a little bit. ADI. Yeah, I like ADI.
Yeah, it dipped below the VWAP and came back.
Yep.
Yep.
Yeah, I like ADI. I mean, Google's not looking bad either, but I like ADI better. Again, it's
Mhm.
just which one I like better kind of a thing. DD starting to come back nicely. Look at that. But it's not trending. It's choppy. Teradyne. We talked about this stock a little bit. Nice looking stock. Just needs to come back. EMR. STLD. Look at this stock. Didn't blink an eye when the market went down. That stock is being bought right now by institutions all day. The problem is volume is going down. You should notice these things. I shouldn't have to tell you these things. You should notice them like that. Richie notices them. I mean, I know Richie notices them like that. You should notice them like that. If you don't, guess who's going to take your money from you? Okay, this is an interesting stock. This stock has to trade above the high. Uh, actually, breakout gap. Here we go. Put this for a week. Got a little gap here. Nice little gap here. Can get, but I would be waiting for this. You see, here's the problem. When you have a steep pullback, like we have on Google, it's harder to get back up all the way.
Yep.
It looks more like it's going to go to the VWAP and then turn back down. Where you have something going sideways, it doesn't take a long for it to get back up. Sorry, I don't mean to be fixated on the same thing, but it's
Oh, it's
important. This is
good.
real. It's
Yep.
happening in real time, and I find that when something happens in real time, those examples tend to stick with you more because then you guys realize like, hey, this guy's not trying to, there's nothing behind it. He's literally showing us what's there right now in real time. Yeah, like right now the market's turning. It's much harder to get back up and bounce all the way from a slope like this than a slope like this is what I'm trying to say. Okay. So those are our watch list stocks. Now, let me show you levels. Let me talk about levels, okay? So every morning, I draw these levels for you right here. I draw these levels for you, okay? Thanks, Raleigh, for posting that. And the
Yep.
question becomes, Roger, well, how do you trade around these levels? How do you trade around these levels? Like, how do you know, where do you go short here, right? Where do you go short here? Where do you go long here? Okay. How do you know this is a breakdown or just not a consolidation? How do you know all this? So I'm going to show you this, okay? I'm going to show you this. I go to a 1 minute chart, okay? And I look for 5 specific patterns, okay? And I'm going to show you these, and I've explained this to you a few weeks ago. I do this for the high flyers, and we do this for Trading Zone Live, and I'm going to show you this right now. Got so many tabs, so many things open here. I don't even remember what's what. I confuse Slack with Telegram. I'm a mess, Matt. We got too many apps, too many things. Here we go. Okay, so I'm going to show you this, okay? So I want you to so look, this is how I draw them, okay? Now I'm going to go back to the 1 minute chart, okay? And I'm going to show you how to find whether they're confirming or not, okay? So these are the actual levels that we have. So let's say your question right now is, Roger, how do I know if I should be buying right here or not at 684.95, right? So I switched to my 1 minute chart, and here's what I'm looking at, okay? I'm going to show you 5 different setups, okay? Five, okay? So the question is, how did we get here? That's the question we're trying to solve right now. How did we get there? What happened to us getting there? So we're consolidating here on the 1 minute chart. Oops. We're consolidating. Why is this so difficult? We're consolidating on a 1 minute chart. We break out. Okay. Why does this? I wish there was a way to make it so it doesn't stop. We break out. And then, as long as we don't go below this line, we buy when we're above this line right here. So let me just draw this again in one quick swoop. Okay. The question is, are you going to go long here or not? Okay. Price is doing its thing. It's doing its thing. It's doing its thing. Goes whoops, and then it does this. And you want it to be doing it for about, oh God, why does it change it into these lines? So again, we're here, we're doing this, we're doing this, we're doing this. Boop, we break out, and then we don't break down, but we sit here. You want to wait for us to break up here. That's what you want to do. So you want us to break, then you want us to consolidate above, and then you buy. Okay? So you haven't broken above this area. You break above this area. You don't go below the line, and then you break above again, and that's when you buy. And you want this to happen within about 5 to 8 minutes. Okay? That's number one. Okay. Number two. So the first thing is price is just consolidating. It's just flagging. It's just kind of flagging below this area. It breaks out. It comes back to the area. You want to wait for another breakout. Okay?
Yeah, and I'll be the first one to raise my hand and say, Roger, normally what I would do, I would take that trade as soon as it breaks through resistance. But it makes sense what you're talking about is that this is just one of your confirmations.
Right. So the next price action is price is traveling quickly up to this point, up to this point, up to this point. It breaks this point. Okay? So that's now, so the first one was price is just consolidating below it.
Yep.
Now price is rushing up to it, breaks out, goes below, 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 breaks once, not enough. I want it to break above this high, the first breakout level, or the second one, whichever one is higher. So if it's rushing up, I want to see it do once, twice, and I'm going to buy it on the third one. And I don't care if it stays above or below this support line.
Right.
Now, why am I showing you these 5 patterns? Because I've looked at over 10,000 charts, and I always find that price moves in one of 5 ways up to these levels or down to these levels. And I hope to God you guys are writing this down. Is this beneficial to you? Is this beneficial to you? Are you guys getting value out of this?
Oh my gosh, yes.
Because you asked me, how do you trade these levels? So I'm showing you how. You switch to the 1-minute chart.
Yep.
And by the way, this is exactly what I do with the small caps, and this is how Matt and I look at the S&P. So that's the second one. So the first one, we're just consolidating below here. The second one, we're rushing up to it, okay? I just showed you 2. The third one, okay? The third one, you have a nice, strong breakout. You didn't catch it in time. You wait, you make sure it doesn't break through, makes another high, whoops, does this, God damn it, makes another high. I give up. I mean, it just doesn't. Why does it do this?
I don't know why it does that. Not that I'm aware of.
I got to figure out a way to make it so that.
Do you just keep on drawing and don't let your finger
so.
up or something?
So I go up, I come back here, I do this, I break down, right? I'm not going to wait all the way here. I'm going to get back in when we're above this level. That's number 3. So the third one, you missed your entry. You missed the breakout. First one, we were consolidating. We dipped our head. The second one, we just went up here and then started coming down. The third one, everything is kosher. You're consolidating, but it just moved too fast. By the time the signal came you moved too fast. So you wanted to wait for it to come back down here. This is painful. You want it to go all the way here. You want it to break down, test, and then that's it. You buy the third time. So 1, 2, 3, like this. Okay? So you missed the run. Okay? And then this one happens all the time. Okay? Here. You missed the first run. You're ready to go in, and then it starts going down. Instead of coming back up here like the third one and breaking out, it just keeps going down, 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 down. Well, you wait for it to come back up, and then you wait for another confirmation. You don't wait for any of this stuff. So breakout, Oh, I missed it. I'll get it when I get a oh, didn't confirm. Now going down, 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 down. Oh, confirm. Second confirmation. We go long. Okay. That's the fourth one. That's a fake out. Okay. That's the fake out one. Get two confirmations on there. And then you have this one. This is the worst one. I hate this one. Oh, we're almost there. No. Whoop, we're almost there. Whoop, we're almost there. Whoop, we're almost there. Just buy the damn breakout when you get it. That's it. And that's your stop loss. And they do this sometimes too, all the time. You
Oh,
figure
it does. Yeah.
it already went up so many times, you might as well just buy the breakout.
I,
And your
I call
stop
that the
loss.
battering ram. You're just beating that
So,
resistance, and finally you break through. Yep.
so let me show this all to you in a different way. Okay. The first one is you're consolidating here. The second one, you're running up to it. Okay. The third one, whoa, too much too fast. Okay. The fourth one, too much too fast and breaks down below this line. And the fifth one is like the first one, but it's not a small flag, it's a big flag. So I'm going to do this again. How you trade this depends on how you got there, which is why I wanted to show you Google. That was my introduction to open up your eyes. How you get somewhere is dependent on how you got there. You understand? So I can go to. Yeah, I'm just doing it on a screen thing. I'm almost done with it anyway. So how you trade all of these is dependent on how you get there. See, this line doesn't change. Price action does. So look, pattern one. Okay. Pattern two. Pattern three. Pattern four. Pattern five. Do you understand, guys, what I just showed you? There's 5 ways this can be penetrated. 5 ways. 5 ways. And I just showed you every possible scenario. Again, flagging. Okay. Rushing up to it. Passing it by and coming back down and passing by and then coming back down to the level. Passing by, going below the level, and just giving you gyrations here below, wide volatility below. If you know of any other way we can attempt to get up to this level, please let me know, because 10,000 charts tell me those are the only ways.
Right.
And no, you've never seen anybody do this for you before. Because nobody's crazy enough like me to sit there with 10,000 charts and look at how we get to a price level. I know I got to take it to a mental institution. But
So a couple of quick things really, really fast
yes.
here, Roger, because this could be helpful to you. Bodine
Mhm.
gave some good advice here on how to fix that problem you're having with the drawing. In other words, if you go to the wrench, in TT
The wrench?
2000.
Yeah, but this is not TC2000. It's a
Oh,
snippet tool. That's the
it's a
problem.
snippet tool. Okay, I got you.
Yes, that's the
Gotcha.
problem. I'm
Gotcha.
not in TC2000.
It's the snippet tool. Never mind.
Yes,
The
yes,
other
yes.
thing was this, is that a question came up from William. He says, hey, can you ask Roger to discuss how he chose 685 as the breakout level when you get a chance on SPY? Because this gets back, you're talking about trading the levels. And then he was going like, so how did the 685 get determined?
Right here. It was right here. It was this level right here.
Yep.
Yeah. It was that level right there.
And William, I don't know if you join us in the morning for Roger's pre-market
Yeah,
briefing, but he does this every morning. He goes through this and he
live.
shows you the levels live.
Live. I do this live every morning and I
Yep.
post them on the Telegram channel. So don't come to me and say you did them after the fact, because unless I have a way to fool everybody,
Nobody says that, Roger.
no, nobody does. But I'm sure somebody will one day. But no, I do it live. And by the way, look how well it hit the lows and look how well it hits the highs. Right here, right there. So now you know exactly how to use these levels. Now,
Yep.
So let me
And
show
for
you.
on the shorts, Roger, you can just turn this on its head.
Oh, it's the same thing. It's the
Yeah,
same thing.
you just reverse it, guys.
Yeah, it's the same thing. Just most people like to learn with the long side, you know.
Yep.
But I wanted to actually show you in a very mechanical way, like like literally show you exactly. It's not how you trade these price levels. It's how you got to the price level. How you get to the price level determines how you react near each price level. Now, you're probably thinking, Roger, that's so deep. Like you look at how you get somewhere to determine how you're going to trade it. Yes, that's exactly what I do. Because if you look at 10,000 charts and you look at how price goes up to those levels, you will see that it does one of those five things every time. It'll come right to it and it'll just consolidate there like a flag, right? You've seen it before. Then it'll run up, hit that level, and then just start doing nothing. Come on, you've seen that one before. Or how about when it rushes above that level, breaks up when you don't have a way to enter, and then just comes right back down to that level, or rushes above it and it comes below it again? Or how about when it just goes and then just teases you with a big fat flag the entire day? Those are the five ways. They, please tell me there's another way. I've never seen another way. So and I gave you the solution to how to trade each level. Now, these levels come up a lot in day trading the indexes. Now, Roger, how come you don't have this on the Pro Trader dashboard? Because the Pro Trader dashboard is stocks, and I do have certain levels, but these levels come up a lot in Alpha Zone Pro, which is the tool we use to day trade the SPY or the S&P 500 index, okay? And you see how we have these levels here? So we take these levels here that the software gives you, plus the levels that I give you every morning, and we add them on here. And that's what we use. We've been using that to trade Trading Zone Live. Now, a few questions you may be asking yourself, okay? A few questions you may be asking yourself. Roger, why do you trade stocks and indexes differently? Why do you have a different platform for them? Because every asset is traded completely differently. For example, if anybody's in my morning, not my morning, well, it is morning, the small cap service, I'm like the biggest stop loss Nazi in that service. Am I not? Right?
Yes.
I am. I'm like the biggest stop knots. I mean, like risk. I mean, look at this, guys. Look at how I manage risk. Let me give you an example. Here, let me show you.
Yeah, while you're doing that, Roger, I want to post something here for everyone. Several people are saying, so how do I see Roger's morning session? Okay, guys, it's in YouTube. So every morning at 8 a.m. Eastern Time, go to Roger's YouTube channel and click on live, and bada bing, you're there. It's free.
So, for example, this is this morning, right? Look at this. Buy stop. Here. Put a buy stop. Stop loss. Profit target. Stop loss. Profit target. Stop loss. Raise your stop loss. Buy stop. You should be both round. Adjust your stop loss. You see how defensive I am? How defensive I am? Do you guys ever see me use the word stop loss in the pit?
Never.
Every program trades completely differently. So, and again, speaking of the indexes, the reason the indexes are different is because indexes are counter trending assets. Okay? Counter trending assets. Okay? When you have why are indexes counter trending assets? Because you have so many of them. Because there's so many different stocks in the index. If you have 500 stocks in the S&P 500, you're going to always have someone buying, someone selling each sector, each index. And so it makes it like this, where stocks are usually bought by institutions at the same time. So they have more of a directional bias. So when we trade indexes, it's a counter trending asset. Okay. And every asset you have to trade differently. We trade the small caps completely differently than we trade the pit. It's like a different person trading. You wouldn't be able to recognize me in there. And the trading zone live is completely different than the pit. Every service, because not because it's a different service, because it's a different asset. It's a different asset. Okay. So indexes, SPY, NASDAQ, Russell, they trade differently, which is why we use Alpha Zone Pro, this tool, to trade them, to determine momentum levels, to determine if it's more like playing a soccer game. Okay. Counter trend meaning here, this is counter trend. Let me show you. See this? Up, down. That's counter trend. It moves like like playing pinball. Boom, pom, 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 pow, 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 pow. Okay. Stocks are more directional. They're more like this. They don't have individuals. So think about this. This is accumulation of 500 stocks. Okay. Take a stock like AMD. It's just one stock and it's in one index, the SMH. And so you don't have all of these counter driving forces at any given time. For example, think about the SPY. Just let's think about it logically. When people are going long consumer staples, Matt, can you hook me up?
Yep.
Put these in the fridge. These two need to go to the fridge. When you're trading, think about this: consumer staples. When consumer staples are going up, consumer discretionary is being sold off. When interest rates are going higher, okay, financials are doing great, but chip stocks are not, and small caps are not. All of these are being influenced by the one market, okay? So the market has an opportunity to do this. And again, let me just share. The market has an opportunity to do this, where stocks tend to do this. Okay, so stock, index. Capiche? That's the primary. Thank you, sir. That's the primary difference. Thank you. That's the primary difference. And you need to remember that. So you can use levels here and you can use levels here, but the levels that you're using and the way those levels are calculated are very, very, very different. For example, when we're trading the indexes, which is what we're doing here, we care about specific moves that are measured by the market makers in the morning. Okay. We're concerned with momentum going overextended in the short term, underextended, overextended, underextended. We're trying to get the flow of the asset. We're trying to move with the flow of the asset. And we also use market internals. Okay. So let me talk a little bit about market internals for you guys. Okay. That this is very, very, very important. And I use this for measuring the index. Now, if you trade stocks, you should know where the indexes are doing, not small caps. Small caps, it doesn't really make any difference. But for large caps, you need to know what the internals are doing. If you're trading the indexes, you need to know what the internals are doing, because the internals is like a doctor coming up to you and listening to you listening to your heart closely versus you looking at somebody from a mile away. To give you a good analogy, and I use this analogy all the time, think about a race car or a horse. Think about a horse. You're looking at a horse race, okay? You're looking at this horse from, 200 feet away, okay? I'm making all this up just to illustrate something. So, and the horse is not having a good day. Now, the horse is a great horse. The horse is having indigestion. It didn't sleep last night. It's frustrated. It didn't have good dreams. The horse is not doing well. Now, if you're riding the horse, you could hear the horse. You could feel the horse. Just like a car. If you're driving a car, you will know if something is wrong with that car. But if I'm looking at a car race from 100 feet away, I'm not going to know if anything's wrong with that car. See the difference? So market internals allow us to see what's making the market tick at any given time. And that's what we use to trade a service called Trading Zone Live. We use a combination of these levels right here, and these levels right here, and this oscillator. So when we get a combination of are we achieving specific levels? Is momentum getting overbought or oversold? Is volume, this is volume right here, and this is price. Are they diverging from each other? It starts painting a very, very clear picture of what the market's doing. Like right now, for example, let me give you a good idea of right now. Okay. VIX is still elevated. At the lowest point today, we went to 17. Anything above 18, 19 means we're still on high alert. VIX is now trading above yesterday's high, which is not a great look. At the same time, momentum opened up really high, and it's been going down ever since we opened. Look at this. Ever since the first tick, we went from 1578 all the way to 800. But here's the most interesting part. How do we get there? Did we uptick at all? Barely any uptick. There hasn't been any uptick. Okay. Well, what about volume? What about money coming into the market on a short-term basis? Well, in the morning, as you could see here, we were at 1330. Look at this, 1500, 1330. We were doing the ippy purple chippy dance, right? We were in Vegas. But then, what have we been doing as the day goes on? We haven't really seen very strong levels. This is the gas pedal right here. This is the gas pedal. Has anybody been really pressing hard on the gas pedal? No, we haven't. And the bond market was going up, but when the bond market stopped going up at 11:15, I guess volatility started going about 25 minutes earlier. This all started coming crashing and down. The stock market peaked at 1055. This bottomed out at 1055, and this topped out at 1115. So as of right now, and also, remember what I warned you about 45 minutes ago? I said the steeper the move down, the harder it will be for this to recover. Do you see this bounce in a hurry to bounce back yet? No, it's building a base. Now it has to build a base so all of this can become equilibrium. Okay, let's just quickly take a look at those two stocks that we looked at. I haven't looked at them in about half an hour, just out of curiosity. Let's just take a look, see how they're both doing. ADI, not great. Not great. Starting to come up a little bit, and let's look at Google. Actually, this one now is looking better. This one hasn't broken down below this. See, all of this right here is getting equalized right here. That's all so if this now breaks above 328, I would say you've got a pretty good buy entry. The problem is, actually no, we're still above the 8-day. So I would be looking to take a long somewhere over here or maybe over here, probably around over here. Let's do that. Reversion back higher. All right. See that? When you have a move like this, you have to have an equal move like this to negate the effect of a move like this, okay? Which we're seeing right now on Google, actually. Play out very, very well. I actually like this quite a bit right now. I'd love to see us get above the VWAP on the SPY, which would be right here. You would take my second entry, Richie? Good. Good, yeah. 38, right above here. Right above here. And look, and if you're day trading and you're right, this is your upside, right? And your downside is from here to here. If you're day trading, from here to here, and your upside is all the way up here. And if it goes all the way up here, the odds are it's going to continue moving higher. Again, I'm just, see, Richie says exactly. Exactly. So anyways, just wanted to kind of show you how price dynamic works. Now, folks, you should, ooh, look at Vold. My goodness, look at this. There's some serious volume coming into this market right now. Yeah, nice. Very nice. Okay, so Raleigh, do we have any questions before we move on to the next segment?
Once again, not specifically that came across here. I think a lot of people, there's a lot of very favorable comments, Roger, because they always appreciate anytime you do what I call a stream of consciousness, where you're looking at the charts and you're just basically sharing with people what you're seeing. And that repetition was very, very well received in this. Now, there were a lot of questions that were people were saying, my gosh, I probably have to have 8 or 10 terminals to be, I mean, monitors to be able to handle all this stuff. And questions with regard to, well, what's the best way for me to get a tip off that a market's about to turn? And, the answers to those questions are going to be forthcoming, really. But Roger just showed you market internals, for example. So the person that was asking, several people asked the question, how do I know? Is there a way that I get a tip or a key that a market's about to reverse itself? Well, if it's an index, which is what you were focusing on, and we're approaching a critical level of resistance, and if you then take a look at what's going on with the market internals, which is something that Matt is doing constantly, looking at, day trading to spy, et cetera, yes, there are clues. And Roger, if I put that together with the drawings that you shared, I think once again, I'm just doing a synopsis of what people have said here in the room.
Yeah, I'm gonna come up with a PDF for those 5 patterns, and I'll get those to everybody. I'm actually working on that right now. You know what? I gotta get with your brother. He's really good at putting all that stuff together.
Yeah, yeah, Cam would
Yeah,
be a great one because,
yeah.
Roger, as busy as you are, and to people that are here, folks, once again, this session is recorded. It's being recorded live. And if you would like to have a repeat of this session, it is part of Roger's YouTube channel, and I'm posting that here. But, I would even go so far as say, well, Roger, let me do this for you. I'm going to send that YouTube link to Cam and see if Cam can put together a PDF because you explained it extremely well.
No, no, no.
What?
You don't have to do that. I have something even better than that.
Okay, I'll leave it. I'll
I
leave it
just
in your hands then.
thank
Okay.
you. I'm gonna make it so much easier. I'm gonna make it even easier for him. So,
Yeah.
but yeah, yeah, yeah. He's the man for the job. Sorry, I don't. We don't mean to be thinking out loud here, folks. We're just kind of scheming and we're trying to get you guys all. We're trying to get you guys the best information possible to help you guys make trades.
Yeah.
Okay, so if you guys enjoyed what I just showed you, I'm going to show you a class. This is a presentation of a program called Trading Zone Live, and in this program, we trade the SPY ETF or the S&P 500 futures. The S&P 500 futures does not have a PTT, which means you don't have to have $25,000 in your account, or you could just use a cash account. But I'm going to show you this, and this will solidify a lot of the stuff that we've been talking about over the last hour. Okay, the way I structure my classes is I try to give you an informal presentation, and then I give you a formal presentation on the same topic so you can understand exactly everything I'm saying from 2 different perspectives. Basically, I try to teach you from the way that I would like to be taught. Okay. So yeah, I think
And
I'm going to,
yeah,
sorry,
I
go
was
ahead.
going to say, Roger, before we go much further, I just want to alert the folks on YouTube that now's a good time to come on over to the Zoom room because we're about to do a presentation and a promotion here. We can't do that on YouTube. So if you're on YouTube, come on over. Matt will put a link there that invites you to the Zoom room. Now, for those of you that are already in the Zoom room, you don't have to do anything. Just sit tight and get ready for Roger's presentation on the Alpha Zone Pro. So with that,